Hi, guys. This was a very interesting session. We covered a lot of questions that you have asked us through the various communication channels. Where can you get education? How long does it take to learn about forex trading? What are the factors one considers before you execute a trade? And more importantly, how do you manage risk in the sense of what is the best capital, among other questions we had. I hope we covered it significantly and you'll enjoy it. Do not forget to keep the questions coming. We'll be glad to cover them in the coming episodes. So there's this question from Alex, and he says, "Hi, I'm Alex. I've been in demo for about 4 months, and I would like to start a live account soon. I was wondering, is it possible to grow an $8 account to be a financially stable account?"
Well, it's a simple and tough question. I don't think it's highly likely that Alex will be able to transition his account from $8 to $8,000. A majority of traders will normally make a mistake along the way and they lose the cash. So my perspective is a little bit different. If it's your first live account, you have just transitioned from a demo account, you want to think of this account as your first stage, as your first step into a live trading account. So you get to learn the experiences of managing a live account. This is when it comes to the point where you have the emotional side of trading. You are feeling the emotions when the trade is going the wrong way or when it's going the right way. This is when you're learning to make your first dollar, lose your first dollar. So take it as a learning experience. The other part is think about your first live trading account in terms of probabilities. So if you make 1% in a day, let's say trading an $8 account, is the same way that you'll be able to trade another size of account. So the numbers don't matter, but the probabilities matter as well as the percentages. So I'll go to a story of a driving school where you go to a demo, you move all those toy cars on the table, and at that moment, it's similar to when you're trading on a demo account. But then at some point, you have to move on to the road and get into an actual vehicle. So the first vehicle that you drive once you move from the demo table, I think of that as the first live account that you have. So on that first vehicle, you're not looking to travel from here to Mombasa. You're just trying to navigate the next lane in your neighborhood, see how you can navigate the next roundabout, a hill start, parking, and all that. So think of it as an account that you're using to learn how to trade a live account.
Okay. I think I'll also add something there. It's a money market. So at some point, you would want to be trading less stressed about you losing your own money. Like you said, markets typically do an average of 30 to 60 pips in a day. And therefore, if you are not able, or your account is not able to sustain that degree of movement, you might want to at least find a way to be trading. Yes, not 50, let's say on a 1 hour time frame, but maybe aggressively trading within the short period of time that your account can sustain, which can be quite hectic and really punishing to you, but at least that is the best you can do with that. But in the long run, it's like an investment. You can do this, but there is this concept known as dollar cost averaging. Let's say you start at $8 today, maybe you do a trade, small trade. Of course, however you want to trade, because you cannot stop somebody from, if you are comfortable with what you want to get. Some people are comfortable, and we have seen people at least grow their account with that amount. So if you start with $8, let's say you trade, you make, like you said, 1% of it, maybe in a week, in a month. Maybe at the end of the month, you add in another maybe $8. So at the end of the year, despite the account growing from trading or decreasing from whatever trading activity went through, you have a consistent amount that is basically compounding in terms of the operating capital in the markets.
For me, the way I would think of it is in a very simple way. Let's say you have 100, let's say, acre piece of land, and you're looking to introduce a new crop. So you're not going to buy all the seeds and then just put it all in the field. So you're going to take a very small piece of that land, a very small square, maybe even 2 by 2 meters, plant your first crops, observe them, see how they react to the soil, learn about them, And once they mature, then you have the confidence to apply the same skill across the entire field.
Yeah.
So with your first $8 account, you're looking to learn, can I be able to make, let's say, 1% a day or 2% a week or whatever the target that is? And once you grow that skill, then you'll consider now investing into a bigger account.
Definitely. Now to the rubber meeting the road. Yeah? You have gone out of the demo in terms of driving school. Now you are on thicker road, and you don't want to end up in it's a bunny or something. You have your chart. I think most people, that is where you find yourself learning. My question is, why is NYSE section open at 9:30 and get massive reaction on price pre-market? I think this person is asking that at 3:30 p.m. perhaps.
Yes.
That is around 8:30. We get the news from the different departments that move the market, be it CPI, be it PMI, and obviously the real market opens at 4:30 Kenyan time as we speak.
Yes.
Yeah, I think that is the most significant question that a lot of traders want to understand.
Yeah, with the New York Stock Exchange, it opens normally just like other stock exchanges. We know that the Nairobi Securities Exchange opens in the morning and closes in the afternoon.
9:30 to 3:30 to be precise.
Yeah. So it's the same thing across board. So for the US, due to the difference in time zone, when it's morning in the US, it's usually afternoon in Kenya. So around 4:30 p.m., this is when the stock market is opening. So by the time the stock market is opening and they are ringing that bell, there's a lot that has happened in the global markets. So first things is that economic reports are usually announced in the morning in the US, and in Kenyan time is usually 3:30. So people don't have time to react because the market is not yet open. So it takes at least an hour where there is a lot of pre-market activity. And then when the market opens, there's a big jump in stock prices. So that may explain why you see that kind of volatility. So in addition to that, there's also the, we call them the quarterly earnings. So every 3 months, companies are required to report their earnings, and they either report these earnings before open or after open. So if they're reporting before open, then everyone will be anticipating to see how the stock market opens, and then they react to that earnings announcement. So those reactions are what causes the big spike in the market.
I also sometimes think, I don't know about you, I think the pre-market open is also some sort of a speed governor.
Yes.
Because imagine CPI has come in basically 2 points above expectations.
Yes.
The market will need like a cooling down. You remember, I think synonymous to a lot of Kenyans when you had that during the Supreme Court nullification of the election, basically it plunged to crazy levels, and everyone is either selling out or buying out, so the system can be confused. So very important for the market to have like a smooth opening, a smooth transition from the different session and absorption of different news that have come out across the day, and therefore you have like a very nice spike in the market that you account and all the traders in general, because most markets definitely contain pension funds of people, and you would not want a shock that would wipe out basically all their life savings. So that is not something that any president or even any person within the financial markets regulations would like to see.
Yeah, it's definitely a buffer, especially if you consider in the last 1 year, the number of halts that we have seen in the stock market.
Definitely.
They normally happen during the main trading session, but not in the pre-market trading. So whenever there is a lot of pre-market trading activity, investors will be psychologically prepared that the move has already happened, and then the reaction is smaller compared to when, let's say, we didn't have the pre-market trading.
Yeah. So there is this question, still in continuation of the markets open and the charts and everything.
Yeah.
And I'm sure you have covered it a lot, be it in market snapshots and the other webinars. I think this is basically, what do you consider while taking a trade? How do I think know how to sell? Or basically, I think I'll combine this with what you consider before taking a trade. And I don't know if analyzing the chart, this is actually the right forum for that. I think that is mostly one-on-one or chart-on-chart basis.
So let's say I'm trading currencies. Before I go for a position, let's say I'm looking to buy pound USD. So I'll be considering quite a number of things. One is what has been the general trend in this particular chart. That is very important for me. I want to know the direction the market is taking. Then I will consider the fundamental factors that have happened over the two pairs. What has been happening in the UK, what is the central bank of the UK doing, what's the Fed doing. And then once I understand those two concepts, I will look at the most recent information. What happened yesterday, what happened this morning. Once I get a picture of what has been happening over the past couple of hours, then I look forward. I want to know if there's any news announcements happening in the market on that day. So if there's any big announcement, I might stay off the market to avoid that increased risk of high volatility. In addition to this, I also want to have a proper trading setup that is based on my own strategy. So I don't want to just enter the market and go for a buy, a sell trade. I want to see a trading opportunity based on a price pattern, can be a technical pattern that I've been trading before on my strategy. And if I see something similar, then I basically execute without a second thought.
I think at the initial stages of any trader, you want to take almost every opportunity you see. You see a spike in gold, you are there. You see a spike in Euro USD, you are there. You see a spike in Nasdaq, you are there.
You see a tweet.
Yeah, you see a tweet, you are there, especially during the Trump era. Those were amazing times. Not so amazing for the pockets, but amazing times. Now, to the next point, it's actually very nice that you have said you need to understand what is happening in the markets. And I know you do a lot in terms of education on that.
Yes.
And I think I can respond to this. Where can you get education? I believe if you go to the FXPesa website, there is a list of the academies in Kampala, in Eldoret, Nakuru, of course, Nairobi too, that is Westlands, Eastleigh, as well as Thika, if we consider Thika and Nairobi, and of course Kitengela. Those academies do not charge at all for the education sessions. I would highly recommend if you want one-on-one. If you're not within any of these vicinities, you can always check on YouTube for the FXPesa channel. You will see either previous webinars or upcoming webinars for your advantage.
And of course, we have a free course on FXPesa YouTube.
Yeah.
Just go to channels and look for the Novice to Pro series. It will basically help you transition from a complete beginner to a pro level trader. And on top of that, we have supplementary content available on live classes every day. And on top of that, we are doing what we call market snapshots every day, covering what was happening in the markets yesterday, what's happening today, and what we're expecting for the rest of the day. And on top of that, we do technical analysis, happens daily at 11 a.m. on FXPesa YouTube.
Of course, if you're listening to this is another educational source for macro. So we cover the other side of things which are not really technical, things which generally affects the market. So if you want to understand some of the news that you normally see or you hear, that news in a talker, I think this is a good session for you. You understand, okay, this is how inflation affects the price of gold. This is how maybe cutting production in oil will affect either the price of CFD oil in the markets. You anticipate the long-term view and get some opportunities for the short term. Now, what do you think is the time frame for one to learn? How long should it take, or how long can it typically take?
Well, in trading, it's a difficult question, but I face it all the time.
Yes.
For anyone who is looking to trade, it's your personal responsibility, and the success that you enjoy from trading is based on the effort that you put in learning and practicing your skill. So while for some people it may take years, for some others it may take months. So it really depends on your effort. For instance, let's say you're a student, you're committed, you have a lot of study work that you're doing, but at the same time, you're investing to learn the skill of trading. So if you're dedicating, let's say, 1 hour a day in learning and practicing how to trade Forex, then it might take you longer from another person who is not working. And let's say they have 4 hours at their disposal that they are studying and practicing every day. So it really depends on your effort. So I wouldn't say it's something that you can start making money in 2 weeks. This is a skill like any other. And for you to excel at it, you have to put in the work and, of course, put in the time.
Yeah, I think, I don't know, most people say the demo account is not the best for learning. And I'm like, yes, it might not give you the psychological aspect, the ability to be patient and fight the urge to either close your trade too early or close your trade too late. But it allows you to do the basics, know how to navigate the MT4, MT5 very well, know how to draw those trend lines, what you do, you know how to color code, you know how to change the candlestick pattern, zoom out, zoom in, add asset, remove asset, basically operate the platform, which is the fundamental, because sometimes you wonder, if you are not familiar with it, you get caught up in a surprise. Why am I getting a margin call and I did not open this trade? Or even the basics, maybe you set a pending order, you are not understanding why it has not been executed on time. So it might not really teach you the last aspect, which I think it's the last aspect, psychology of trading, but it will give you the necessary foundation to thrive for the entirety of your trading.
A funny fact is that I've been in the markets for the last 10 years, and I'm still using demo account up to today. So every time I'm trying to filter which one of these trading opportunities goes to my trading live account and which one goes to my demo account. So if I'm completely unsure about a trading opportunity and I'm not very confident, I will still take it, but I will put it in the demo.
Yeah.
And for the one that I'm confident about, I'll put it in the live.
I don't know if you normally do. Go ahead, sorry.
Yeah. So the demo is a really useful tool to keep on playing out different ideas, see how they work. And if they work, then you incorporate them as additions to your live account.
Yeah, I was going to ask, I don't know if you normally do this. Let's say there is a way in which you enter the market, you are quite used to it, right?
Yeah.
And the demo is showing signs that this is an opportunity coming, maybe on a bigger time frame, but on a smaller one, it's not quite clear.
Yeah.
I normally try to put the pending order on the live, and then the real trade on the demo, and then you monitor it.
Yeah.
By the time it obeys maybe my strategy, I'm good. First of all, I tried it out, and then I was patient enough, and by the time it achieved it, it was a very good entry, and it was very clean and less hassle, I believe. I think that is the best. That's how I approach it. I don't know if any trader does it. Maybe they can get in touch with us through the various socials.
So for me, an example, let's say I'm looking to trade some form of movement in, let's say, US equity indices.
Yeah.
I do my analysis for the top three. I look at the NASDAQ, I look at the SP 500, I look at the Dow Jones, and then I see they have a really good opportunity, but I can't take three of them because they have positive correlation. So I will choose one. Let's say I choose to trade the SP 500. So once I execute the trade on the SP 500, I also execute the other two on my demo. And then I will see at the end of the trading session whether I made the right decision or which other one was a better opportunity. And then over time, I can reassess and see maybe I should quit this and start moving towards this other side.
Yeah, it gives you like a forward guidance on your positions.
Yeah.
Now, as we sort of approach to the, I think one of the most recent questions, or rather a hot topic at the moment, I'll combine these two. Here, I think we can answer this fundamentally, and maybe he can better be served on the daily webinars we conduct, especially the 8 p.m. one.
Yeah.
What is demand and supply?
Well, that's an interesting question. It's one of my favorite questions to answer.
Yeah.
Because I've been doing education for a long time. So when you talk about demand, I think of it as the number of people or the amount of dollars that are ready and willing to buy an asset at a certain price. So for instance, let's say we're talking about Tesla shares. So demand would be the amount of dollars, or we can just give it a label or number of people who are willing to buy those shares at the current level, let's say at around $230 per share. Then supply, the number of people or amount of money that is available to sell those shares at the current price level. So when you say there is a lot of demand for Tesla shares at a price level of 200, it basically implies the willingness rather than the amount available on the exchanges. So demand doesn't have to be like physical orders on the exchange. It's also psychological. I remember when you bought Safaricom shares, was it 19?
Yeah.
Yeah, that was demand.
19, it was 14, around 14.
So even though you didn't have a pending order at 19, the moment the price level got there, demand was already existent. People already knew that if the price gets here, then we are getting in. So out of the entire market, all the dollars that were ready to jump in at that price level basically equates to the demand at that price level.
Excellent. Part 2 of the question. What does it mean when the price has tested a support or resistance levels multiple times?
Well, if it's a support level, it basically means it's a demand level. I'll allude to the previous example of Safaricom. So Safaricom got to around, was it 19? That was the lowest price?
No, it actually came to around 14.
14.
Yeah, so I think it touched at 13.9 something before now shooting up.
So let's say 13.9, 14, that area is the demand level. So we call that a support level where price went down, it was unable to break and it started going up. So if price was to drop back to the same point and there's still more demand, then price would jump up again, okay? So if it goes a second at that time, then we would normally say in trading that price has retested this support level several times. So if a support level has been retested several times, it means it's a psychological zone, and it often represents the best entry point for a trade, either a buy or a sell trade. So what it means is that that area has a high opportunity for any trader out there. So this opportunity could be on the buy side. Let's say if it's a support and you buy and price goes up, you benefit. On the other hand, price could also break. So if price breaks that level and keeps going down, then for any trader who is entering a short selling position, they also get a point of maximum opportunity. So whenever we talk about those support and resistance levels, there are points where they are, let's say, optimum entry points. So it doesn't tell you the direction where the market will go, but it tells you that there is a real good opportunity to make a market entry.
Yeah, I like the word area, because that is where I think one would be confused. It is not a specific price. It is not a specific, let's say, candlestick formation or anything.
Yes, it's an area.
It's an area where you might want to see the candle breach so that you have a confirmation and then you can make an action. It has given you the signal basically that, okay, do this, sell or buy, because the area has been generally breached.
A good example was, let's say, the price of petrol in Kenya a couple of years ago. Remember when petrol was oscillating between 90 and 100?
Yes.
So when petrol prices would get to 100, we would get news reports saying petrol is too expensive. And if it would get to 90, then people would say petrol is cheap.
Yeah.
So when it's too expensive, there would be this psychological change where if it's expensive, the sellers are making a killing. So they bring in more supplies, which would flood the supply and push prices back down. So it was a psychological resistance level where everyone would be reacting in the same direction. So if you're a consumer, you're reducing your consumption because naturally you think that level is too expensive. So it applies the same way with Forex, stocks, and many other assets.
Yeah, I think this goes back to the earlier point whereby the more you practice, the more you learn, the better you start to understand, especially these levels. If you have a laptop or even a phone, you turn it to landscape, you're able to, let's say you're using a bigger time frame, H4, H1, B1, you're able to zoom it out, draw the levels, even rectangle them, and it allows you to keep an eye on them so that anytime you are looking for an opportunity, you know, if this point's a breach, I'm able to go down and at least see how it goes. Now, to this question, AI. I think AI has been significantly talked about at the moment. And I've seen recently on reports, major investment banks are basically using AI for sort of making their predictive models. But there is the other side of, I don't know if it's AI, but the bots. Automatic trade execution, something, or expert advisors. And I know we covered this before, but maybe we can answer to this guy. Is AI existent within the Forex market or even financial markets? And how can anyone maybe adopt it or use it to his or her own advantage?
Well, I think AI is not a new thing in the financial markets. Has been there. I think for over the last 10 years, we have been seeing a lot of AI products being implemented. So there has been a lot of investment banks that implement AI in doing their research, especially when they are doing sentimental analysis. They would be, let's say, scanning the top social media sites to understand hot stocks people are talking about, and somehow that sentimental analysis would give them an edge over the markets. But then, for any good AI product, it requires a very large data set in order for it to learn quickly and give accurate models. So for some of the AI products you might see online, people are selling maybe on social media, they most probably haven't gone through that phase of learning through a very large data set. So in that case, they may not be very accurate. However, if you're taking advantage of an existing AI model, such as let's say ChatGPT, then you might have some better results. So I know there's a lot of guys who are building apps that basically helps you to analyze stocks, analyze currencies. So if you happen to land on one, then that could give you some good edge in the markets. But currently, I don't know any one particular program that is currently being used by Kenyan traders.
I think even before you start self-driving, you might want to know how to drive yourself, right?
Yes.
You cannot just get a Tesla Model S and you expect it to drive you anywhere.
Yeah.
What if the AI, the self-driving software basically fails? You will have to know how to start the car, do the basics. So to some degree, every trader, you need to understand the basics of support and resistance, what we just covered, candlestick patterns. And then by the time you deploy it, at least you understand, okay, this is, you can even vet the bot that you have. You cannot vet something you don't know how to use.
So basically what you're saying is learn swimming before you take a boat.
Definitely. Yeah. I mean, you can go to the boat, but Titanic taught us...
Swimming is a good skill.
It's a good skill. It's really a good skill because I get this question a lot as well. Can I deploy a bot? I'm like, yes, you can. But how will you know it's a good bot?
Yes.
If you do not have set parameters of how you'd like to trade, you'd like to risk 1 or 2% of your account, what amount is actually this bot working efficiently with?
Yes.
Therefore, I'm a hands-on active trader. I prefer to do it on my own. But if you are to do it due to the nature of your work, at least have some basic skills that you are quite confident about. And therefore, if you let it to somebody, another machine, at least it's copy-pasting based on maybe AI and how you have traded, what you would like it to do, and not erratic or reactive to any fundamentals happening in the markets. Yeah, I think that has been good. I hope we have answered a couple of questions. If there is any which is missing, do not, of course, let it out. You can always chat us. Unless you have something for us today, this very cold and sunny Wednesday afternoon.
I think it was a good session.
Yeah.
Building up onto the questions we have had over the last couple of episodes. The last episode about the Bank of Japan was really good. I'm getting some good responses. And going forward, I hope, and I've planned this, we'll be having a very interesting guest. So for anyone who is listening to this podcast, make sure that you share with your friends. Make sure that you subscribe to our podcast channels, including YouTube, Google Podcast, Apple Podcast, Spotify. Make sure that you comment and share. And of course, if you have any questions, we are always willing to respond to them.
Yeah, definitely. Of course, as we still wait for the results of the elections.
Yeah. How do you think the Premier League started?
Bullish. The Premier League started bullish. So
what team are you bullish on?
I'm still bullish on Man City and obviously the multi-billion-dollar spending team Chelsea. I think they will shock a lot of people. I am also enjoying the way Liverpool, the Scousers, are getting embarrassed.
That's
proper bullish, proper bearish on them. So I think it will be a good session to touch grass over the weekend after the chats.
I think with the injury with Kevin De Bruyne, other teams now have at least a chance, a slight chance to compete against
It's
Man
not
City.
much, but that's little. That glimmer of hope is enough for them. We have not mentioned the other one. I hope for those who do not know, you can tell us after you listen to this which other one we have not mentioned.
Which one?
And we are no. Bye, guys.